Welcome friends and traders. Today we are discussing the two chart phenomena and the oscillation trading. The oscillation trading we're going to control using SPX chart and ES chart. We are going to be trading ES futures on the right side. On the left side we have SPX chart, which has been tuned for Hikinashi, as you can see, with 333 frequency, and on the right side we have Hikinashi chart of 111, which is also 3. So this is a link of 3 and 9, and on the bottom we just have Fisher transform, if you want to see right here, Fisher transform, and same as this guy, and this is our 369 oscillations. So now how do we trade oscillations? Alright, so what we have done here, we have linked 3 to 9, and also if you just look at the whole number, we have 3 times more information on the left side than on the right side. So we have done the 3x on the Hikinashi. We have also done 3x in a different way, which is, if you compress 3 plus 3 plus 3 is 9, on the right side is 1 plus 1 plus 1 is 3. So we have linked one chart, the trading chart, with 3x on the guiding chart, which is what we're using SPX for. Here also we have, as I said, Fisher transform. Alright, this is a good mathematical structure to use, Fisher transform. Used very heavily in lots of algos in professional domain. So we will just stick with this oscillation, which is out of the box. If you structure your charts the way we are showing right now, we are in a good position. So let's start with something. We can pick any day. We always like to pick what we see on the chart. We can pick any day you like. Let's pick these days. Let's start here. So market open here, and it went up, as you can see. Now this is only daytime trading. Do you understand that, right? Because this SPX is only opens New York 9:30 time frame. So you're going to take that opportunity. The momentum has been on the buyer side. Now Fisher is just used for that reason. If it is moving up, as you can see, bars are getting higher and higher and higher, I'm saying let me initiate my long bias. All right, so okay, so this is saying higher time frame is moving, the frequency of 9 is moving higher. If you think that way, if that helps you think that way. It's a multi-time frame trading anyways, but it has been set up in a very unique way, as you can see. All right, so let's zoom into this right side chart. Morning happens and you're looking at this, I should be going long. So what we are saying is you just wait for pullback. Now this is what people are asking for scalping using oscillators, and this may be a good approach. You can give it a shot. All right, so here on the right side, I want this guy, the Fisher transform, to be on the other side of this momentum on the left side. So if the momentum is biasing, is moving on the upward trajectory, as you can see this very clearly, we need for this guy to pull back. You think about a big wave and we have a smaller wave. I need to flip this Fisher on the execution chart on the other side. Do you understand? And I want these oscillators, green or yellow, on the other side. And I want this momentum to be moving up, and this is my pullback entry. Now this is 5-10 points, 10 points, easy to go. All right, so let's mark these. If I can mark it. Oh, sorry, I'm looking for arrow. Right here. All right, cool. All right, so we got this. That's the law, and this is the pattern. Now what happens next? Market is still moving up, right? When it starts coming down, I will not go long. Remember that. So I got this trade, and I want to wait for this guy to come here. Now at this point, even though it worked, the rule says what? Look at this bars I'm making lower low. I will skip this trade. You have to skip this trade even though it worked for you. This is where you get in bad habits. All right, there you go. So one trade came in the morning and you're done. Now I see this momentum is moving down. The bars are moving down and down and down. It's nothing to do above zero, below zero. This is using this slower bars, loss of momentum. Price is going sideways, but Fisher is losing momentum. So that means I'm taking the short bias. How do I short it? I'm gonna look for the things which is this Fisher is on the other side and this oscillator is on the other side, which is the market is trying to go down, as you can see here, driving this. This is a pullback, anti-trend pullback, which means it has to be on the overbought area. And there it is. See this right there. Why not here? Why not here? Well, why not? Remember, I'm putting these two things together. This Fisher told you to start looking for shorts. I want this oscillator, the orange one, to be on the upper side, and there it is, and the Fisher to be on the upper side, and there it is. We initiate a short position here. Now I'm going to take for shorts only, and now this is also going down. Now this, if you catch it, you hold it, you're good to go. So you got two great trades for the day, and if you made 100 points, you should be happy camper. All right, and there are some other people who want to keep on going, which is okay. How do we go? Well, we have to follow the rules. And remember, if you have moved up so long distance, we have to look at our frequency vibrations. We have to look at our other things as well. Let's see if this is the end of the trend or not. Is this the end of this move? Leg down, yes or no? How do we know? Well, I put my tool here. We talked about it yesterday, right? So these blue lines, which we see all the time in Twitter, this is the blue line phenomena. Now this is where people who are professional traders who have gone through level 1 and level 2, they have these tools, so they know exactly where market is going and to turn. So they will not initiate short here. They know this is a turn for market maker level going up. All right, so I'm going to remove this tool because we are not talking about tools today. We're talking about oscillations today. All right, so now what's happening here? Now this guy is going down, right? Okay, so I will not trade. If you want to take the above zero and up moving, even better. Now below zero, if definitely not going long. All right, definitely not going long. So what do? You have to wait patiently. Now I'm talking about oscillations. This was, we know, C54 telling us to go long. But as an oscillator trade, we are trying to limit our trajectory of trading. So when we have this, now we are moving on the downside. So now I'm looking for a pullback. So where's my trade now? Well, same thing. This Fisher has to be on the other side. And so it has to also match the oscillators. So this is one shot. And this is another shot. Now you might say, okay, hold on a second. When I take this shot, or if I take this shot, right? I will not take this shot because I know this is C54. As an oscillator trader, if you have to take this trade, it's not a bad trade actually for 5-6 scalps. Why? Remember, this is still moving down, lower and lower and lower. This has pulled back. Right here, sorry, pull back up, Look at the oscillation and look at the fissure. The pattern is here, right there. So this is why we have two of. If this is not the pattern, this pattern is the one. So you got some quick 4 or 5 point scalp. All right, so this is where the rise and the fall of bars. Then also you can do other one, which we explained, when you do a new cutover. For example, if you have to look at other things too, like ADD and tricks and ticks and all those traditional way of trading, we can talk about it some other day. So if I want to take shorts only, one other thing we can do is look at this blue line, if it is above or below. All right, if it is below, this is the average of fissure. Below 0, above 0, that is another pattern. And then same rules apply. If it is below 0, I'm going to take shorts only. So this guy is pulling up, let it pull up, right? So this is where this guy is a short and this guy is a short. So let me mark these also for you. Now why is this a short and why is this a short? Look at the oscillations on overbought. So does the fissure, but this on the guiding fissure is below 0. So there are two patterns of the guidance, below, above 0, and the direction of this momentum. Is it falling or is it rising? All right. So you can go back and check which is suitable for you. Obviously, you are going to do some other. We are not looking at intraday, not looking at any other tools. We have so many patent tools. We are not looking at any of those formulas and market makers. We are looking at just pure oscillation. Fisher transform is a great mathematical approach to trading, along with other approaches of the oscillations, which is 369 oscillations. So what else can we do? What else can we do? Well, we did enough, but okay, maybe it's time to go for lunch and wrap it up. Well, if not, let's keep going. This one has to pull up. No pull up, no pull. This one pulled up little bit. It's not really, it is still sitting at 0. Should be on the right side. You see the value. I will at least go for 2 or higher. This is nothing, so I will ignore it. So that means that still the same trade is going on. Now this is a pullback, strong pullback to 4, 2 or higher. Look at this oscillation, this and this. So we have a loss here on this one. Now you can see why we had a loss. It's hard to say. Let me not get into that. The waves inside waves happening here in this oscillations. All right. So this one of the patterns we also talk about is encapsulation pattern. So this actually is a good pattern to go short here and here. Only thing is momentum was not done. So you took a 3-point loss. Let's put a square or just say loss. This is a loss. It did not pull. Okay, and then the next opportunity came right here again, and this time is still encapsulation, which means both of the oscillations are overbought at the same time. And this, and look at this guy is also below 0. So we got another shot. So we can take a shot at another shot. All right, here's another shot. So let me just mark it so we can see it together. Okay, and now momentum has gone on the other side right here. So is there any other shot? This is almost at 0. I'll be cautious, I think. And again, if looking at this is also market maker levels. This was a first level market maker. This is second level market maker. I will from the swings, this is swing market maker levels. I will be cautious shorting when we know it is going to turn. Market maker is going to trap us. We know it, but if you don't know it and you want to take a shot again, the only thing cautiousness we have, this is already close to 0 on the left side, right? So it's going to be high risk. So if you want to take it, this is a take, and let's say 1 point, let's call it a loss. Okay, 3-point loss. So I'll put it, don't worry. Now the thing has flipped on the other side. So now I'm going to go long. Okay, so we lost 6 points. Let me just do it before I forget. Another loss. This loss was, these two losses, one was actually a good thing, a real loss. This is a real loss. This is not a real loss. Okay, and because this could have been avoided. Let's say this is how trading works, right? We don't know. This could have gone here. Boom. We don't know. But anyway, so this was a loss, 3 point. This was a loss, 3 point. No problems. No problems. How much money we have made here, right? Think about it. This trade is nullified because of the 2 losses. But look at this profits. Huge profits, huge profits. So I think at the same time, as I keep telling friends of profits, is that 10 trades a day you take, you will take 2 losses. And that's extremely good. Should have a 0 losing days. 0 losing days. 0 losing days. That's what is what we are after now, and this is what we have achieved. So right now market has gone to the other side. So we are now the oscillator trading experts. So what we're gonna have is this now longs only. So where are the longs? Fisher on the other side. And is it matching the oscillator? It matched here. It matched here. So you should be able to handle the trade. So 15 points, 10 points, 15 points, 30 points. I mean, like, that's unbelievable. 1 loss is wash. Okay. All right. Now we're going to take longs only. Where's the other long? Right here. Look at this. Fisher 2 or below. All right. Encapsulation, retest, trend line, everything is coming up here. And it's 520. I think you're better off not doing much. Now, this is on just dealing with the oscillators. All right. This is another one, which is, let's say, wash. Here's another one. Right here is a good one, right? So boom. Oscillator is not matching. This is at 0 area, not matching. So this no trade here, no trade, no trade. Actually, this is not a trade. All right. This is encapsulating and doing this. So this is a trade. We're cutting at the edges of your closing time. So as I said, 1, 2, 3, 4, 5, 6, 7, 8, 9, 11 trades, and you lose 2. I mean, this is how it goes. 20 years of trading, the statistics will not be beaten. You will, if you keep trading, probabilities is gonna hit you, one of those. So the tight control losses. it's not about losing 3 points, making 3 points all day long. That's not the way to trade. This is the right approach to trading, 10, 12 trades a day if things are lined up. So now before we depart, let's talk about the left side. As a professional trader, what is the best, actually one of the best trade we had? How, if I tell you to look at this and give me the best trade? So here we have to look into the analysis of these bars. All right, this is the swing. This is a big bar. This is the swing of this swing. We talk about the swings are good, and this is a 50 of the swing. This is the 50 of the swing. See that? So again, going back to Gann's law of 50, the 50 is all over in the scriptures, where universe takes control of your actions. There we go. Right, so 50 is the way, and this is roughly 50. So when we are here at the 50, this is a good trade, because what is happening is we have also reached a structure of 50. Okay, so now on the long side, market is moving up, pull back to 50. Right here, pull back to 50. Right here. So this is a great trade. You see that? So it's not about trading all the time. If we just did that 50, kept quiet, nothing else, when these rules were met. So that is your 30 point, and that is your another 25 points by doing the right thing. And then this structure of this, again, this was the 50 of this, is retested a second time. Right? At this point is retested, but if you look at the oscillations, it says longs only, you didn't have the short, right? But if you combine the oscillations and the rules and the 50, if you just want to do 50, there's something you have to think about, right? Are we going to do, so let's put the oscillation on the left side as well. This is for bigger swings. Now this is 50 we talked about, right? Look at the oscillations and look at this guy, 50. Big moves, huge. Oscillations of this, big move. Let me get rid of this. All right, so this is encapsulating. Short is coming. Short is coming. Let the momentum settle down. 1 bar. We got a short, and we already know this short is coming. We already took the short also, as we explained. All right. Okay, so you can see the big upcoming moves with Fisher as well on SPX, which is going to drive. I mean, they're all in sync anyways, right? So. All right, so we got this huge 3 swings down. Huge means huge. This is it, and we are not doing anything else. We're not doing anything else. If I just go that route, we're not doing anything else. We're not doing anything else. We have, as I said, very sophisticated things. We're gonna just simply look at simplified version of things. So everybody has this Fisher transform. Everybody has these bands, Keltner channel bands. You can add 2 of them with 3 and 2 and other kind of inputs for the separation. We always do 369, so they are 369 separated, and there we go. Right. So now we have a context on the top of the band, and we have this 50 is hitting us Oscillator is telling us, and there's a big move, 100 points. Okay, let's do one yesterday. Is this a good move? Now you're experts. It's easier to become trading expert. So yesterday, since we did everything for one day, let's do a quick test on yesterday. This should be a short, I can see, based on the oscillation and Fisher. And if you want to wait for this guy, this, I think they all came together, right? Boom. This is pulled on the top side. This is on the top side. This is telling us to go short. Catch this, live out. We shorted this yesterday. Boom. If you catch the early morning, high or low for the day, you're good to go. This enables you to achieve that goal. Now this is all happening in multi-chart software. That's the best software out there, actually, in my view. What you can do with the bars and is unrealistic. Okay, I told us it's going. It's still short. Where's the other one? This is another shot right here. Another leg shot. If you missed that, there we go. Here's another one. I'm just looking at these oscillations on the bigger swing side, as you can see. Okay, so what else? That's it. 3 big swings on prior day, 3 big swings on this day, and it's all happening in New York time because SPX. All right, so let's okay, so we always should do things in 369. So we did 2 days, let's do 1 more day. So just to be truthful to our vibrations, and this is encapsulation. Early morning market goes there, top of center. Where is the center here? This red is the center. Then we have yellow, and then we have blue, then we have the green. There's a lot more going on. These bands are not just the bands. We look at the distance between space of the bands. What these bands are actually doing, we are looking at this distance of what is not there. But remember, in the vacuum quantum fluctuations, the vacuum energy is fluctuating, and this energy, which was, we knew it was there, but we did not know how to measure it. We didn't understand it until now. And then I think if you're really interested in understanding all this quantum vacuum fluctuations, understand this. What you don't see is controlling what is seen world. The seen universe is 99.999% of inverse of that, which means we are 0.00010 raised to power Planck 939. We will talk about it some other day, but think about it. It's a very small number, Planck, 0.00039 zeros. 37 number is a very important number. America came with F-47. 47. Why did they come with the fighter jet F-47? F-16, F-18s, F-35, and 47. Why 35? 35 is 3 plus 5 is 8, the hidden 9. What is 47? 47 is a degree of fatality. You think all these people, big shots, they don't know all this? They do. So here's a funny thing, right? Gann was consulting with all these guys too. So they know a lot more, consciously or subconsciously, hard to say. So there is the physical manifested space is a leak of vacuum fluctuations. So think about that. All the planets, the galaxies, what we see, the physical proton mass is 0.0000, put 39 zeros. That's small. That means there's something bigger force on the other side, which is the vacuum space, vacuum fluctuations, right? If you go and do some research on this deep understanding, what is it telling us as a trader? Which means if this force, market went here, and this is a vacuum force right here. What can I do with this vacuum force to do my targets? You understand? All right, I didn't want to talk about it, but let's finish the discussion. So here is the space, all right, where that high was made. I'm just doing it roughly so you'll get some rough estimate. But here what we are saying is this space, we measure the price, the manifested world. We measure the manifested seen world. The tools are based on that, but something else is driving this market, which is allowing us as market participant to move in this allowed leakage of space. This movement is leakage of space. You think about a water in, let's say, big huge mountains. There are big rocks and there's ice is melting, and this taking a spat, right? It might take millions of years to erode the rock, but that's what you have to think that way. So space, even though you don't see it, is actually the rock. It is the reflection deflection point which is controlling and allowing us to move. So this is the hidden 3 and 3, and it's reflecting on the spiral from the space spiral, and it is hitting this side here. So what I've done, I've taken the space. Now this bands are not really the bands we use for that kind of analysis, but it's close enough to get you the point. So this space, which said he cannot move further, deflected it. So this space itself has to be measured, not the price. Well, he is the controlling hidden force, and this is reflecting right here. And where is this? Right here. Market went here. See that? Boom. 98. So it went right here. All right. So that is what it is. So okay, so we are talking about we got distracted with something. We went to day 2 and let's go to third day. There's so much to see, so much to do. Here it is. Short here. Do you agree this is a short? Well, look at this. If I just look at this, right, oscillator, if I forget about everything else so far, you said, oh no, hold on a second. Well, if you want to wait for this guy, just wait for this guy to show 2 lower low bars, and it does. 2 lower low bars. You have to just really look into it, right? 2 lower low bars at the peak and the oscillation. So this is a great shorting opportunity right here for us. What else is there? Is this a shorting opportunity? Look at this. This guy went on the top. This guy went on the top. And if you just want to take this, now this one is not giving us the information. This is giving us the information. So this is where again, pull back. Let's go back into this system. So if you have taken such a big, huge, it may not be that huge, but 15 points should be good to go. Because market is almost like going nowhere before they're preparing for the next move. All right, so there it is. You can look for shorting here. Now this short, if I want to take a short here, look at this oscillator and look at this fissure on the execution chart. They are on the same location on the other side. This guy is flat on 0, so I will trust this oscillator. So if I want to compare these 2 oscillators, obviously we trust our 3, 6, 9 things. But if you don't have those things, you can play the game of fissure I told you. Now if by adding this one single component for multi-charts, the way the charts are set up, you can see the whole phenomena. Your life changes forever. So this is a good filtration. Short is coming, right? This is going up and up and up, overbought, overbought. Okay, this is it. All the patterns are showing up here. This is 4 or higher on the short side. This is also 50. Remember, you can just eyeball 50. 50. Again, talked about 50, 50, 50. Do monthly charts and 50, weekly charts and 50, daily charts and 50, quarterly charts and 50. You'll catch all the swings for multi generations. There it is. Another shot. Okay. So if I want to go long, where is my long actually? If I want to go long, right? So let's say I want to go long. We think, okay, long is coming. Okay, long is coming. Fisher has to be on the other side. This has to be on the other side. So they both have to be either one or the green or the yellow. They have to be on the other side. So let's zoom in. This is it. Now this is happening on this side, but look at this big boy. He is gonna smack it down. We're not gonna go against it. Let this big boy pull down. Where does it pull down? Let's see. It pulls down here, and this guy Fisher is below. This is 4 is better. 2 or below is better, right? There it is. This guy is pulling. This guy is pulling. Double top. Double bottom. And this guy is the one who's telling us, wait. If you're patiently waiting, he's gonna pull you up, and it does. Here, another one. Here, both of them. This was small one, 5 points. This was 10 points. But we made the decision here. 5 points. We made the decision. This big guy. Another one is this one. Okay, so there we go. Boom. If I don't show you the prices. So next time what we will do, we'll take some random dates. We'll just look at these oscillations only. We'll suppress the price. We'll just look at these oscillations and this just 4 indicators. We'll not see anything else. We'll suppress it, and we will see how many were you able to read the things properly or not. That's what you need to practice, like here. Well, you can suppress the price. You don't see it. We'll go back randomly any day, and you should go back and test your understanding things, right? That's important. I think we already went through this shorting phenomena. Okay, there's another shot, right? We already saw that shot here, shot here, shot here. Okay, we are back to another day. So this day, what did we get? We get another 2 shots. And the long, we got some. Okay, so long came, small long and big long. So let's mark it also. And I think we'll just stick with 3 days analysis and call it a night, I guess. This is another one. Now, okay, so now this one, look at this Fisher, this oscillator, both are ready to go up. Third one is ready to go up. So look at my cursor on crosshair. Multi-time frame in action. So I want to take 1 point stop loss, 2 point stop loss. That you have to manage on your own. You should have your other advanced techniques, 3 point stop losses if you want. So you have to give some room to play, right? This is the momentum trading, this train which hits you. You have to look inside the bar, and if you want to get to that level of 4 ticks or lower, 3-4 ticks, or maybe you have to try a few times. Then same thing, right? If you try 1 point stop loss, find the T-bars, look at the T-bar videos, T-bars, where we'll talk about it again sometime. T-bars, right? If you get the perfect T at the location, ready to move on, you try one time, they snip you. They rotate the market for retail market. This is not inside bid and ask. This is you're looking at some retail market. They might just flip you over 4 ticks and then go off, right? So they give some room. Trying 3 times a 3 point loss is the same as putting one trade with 3 point loss instead of putting 1 point 3 times, right? But eventually you'll catch the big move. Just keep on going, keep hitting, follow the strict rules. So what is missing here is the precise precision of the price. So we have those price levels as we talked about yesterday. 3 point, 3 point, 3 points. If you place that grid here, you got a much better chance of success. All right, so this one is a long on this bigger picture, right? I'm just looking at my oscillator, bigger picture. All right, and then we see market is making a lower low, Fisher is going good, this guy's pulled back. So you can also play these patterns where market is making a lower low. That means you may get maybe 3, 4, 5 good trades a week, not 12 trades a day. So just look for divergences. Divergences with pullback, right? Divergence of price. Look at this Fisher and a pullback. Let me just mark it right here. Market made this way. Now if you look at this way at this point, and this guy is strong, right? And during this divergence, we have a pullback right here on the bottom. Patterns, boom. And this is what we are saying. Okay, now this is happening. This is ready to go. Wait for the Fisher on the exhibition chart to be on the other side. This Fisher is already below 2, hitting 2, 2, 2, and there it is. You may be tempted to go this way, let it pull back right here to the right time, and you go long, right? So you're going long. 6 is a loss. 6 is right here. Boom. So if you're willing to lose 3 points and you accept that loss, and you're willing to go up 18, 15 points, 1 to 5, 1 to 5, 1 to 5, right? You can lose 5 times in one big trade, you're break even if you are trading that aggressively. All right, my friends. So 3 days, 3 great days. We can keep on going. All right. Thank you very much. I appreciate your participation in becoming an oscillator trader with multi-time frame, Fisher, and some advanced oscillations. Thank you so much.